Today is Sunday, October 13th, and this is another update on my progress beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. Since my last update, I closed out of 2 of my short positions. I closed out AMC with a 9.76% gain. AMC reports their earnings in a couple of weeks, and that time is usually very volatile. I did not want to risk the possibility that the share price rises heading into earnings, which is why I decided to close out the position now. Unfortunately, it was all pretty much a wash because I closed the 5.9 short position at a 10.11% loss. 5.9 announced 2 new data centers in India, and the share price has reacted positively since then. So before the 10.11% loss grew to anything larger, I decided it was best to cut ties with that position. This is what the SPY chart looks like right now. It's been performing very well over the last couple of days. Right now, the share price is above the 5-day and the 15, which means that the market's heading in an upward direction at a pretty good pace. Right now, it definitely seems like we're heading straight towards this trend line, which I do think in the immediate term that the SPY price will have a hard time getting over it. I've added these 2 black vertical lines as an indicator of potential volatility. This first one represents the presidential election, which is going to be Tuesday, November 5th. And then 2 days later, on Thursday, November 7th, is Jerome Powell's Fed speech. So to have both of those events so close together is definitely an area of concern. From where we are right now to my year-end S&P price target, on the low end, it's only a 1.75% gain to get there. And then it would be a 3.5% gain to reach the high end of that target. Like I said earlier, for the time being, I do think that the SPY price is going to get above this trend line, but I think it's going to show a little bit of weakness heading into the election and Jerome Powell's Fed speech. But once we get those 2 events out of the way, I do think that the market's going to ultimately rise higher into the year end. This is the first page, all my current positions, which is showing 13 out of 15. Right now, General Electric, Walmart, Amazon, Costco, and Spotify make out my top 5, and those account for 27.72% of my portfolio. The Nvidia position is all the way up to a 31.47% gain. PayPal with a 25.18% and Shopify with a 23.01% gain have been my other 2 biggest winners. C3 AI recently has performed very well. It went from being in the red to now having a 5.65% gain. As much as I want to sell out of the Google position, which currently has a 5.55% loss, I do think that it's been trading basically sideways for too long, and that an upward price movement is going to be right around the corner. So hopefully I'm correct because I'm going to hang on to it, which I do think is the best decision. And this is the second page showing my remaining 2 positions. I do still have 1 short position, which is going to be in Roblox, which right now has a 4.47% loss. Right now, I have 67.02% of my portfolio invested, which means I have 32.98 sitting in cash. Since Wednesday, my portfolio saw a gain of 0.42%. The S&P 500 rose 1.1%, and Pershing Square had a gain of 1.8, which brings us year to date. My portfolio has a gain of 23.15. The S&P 500 is at a gain of 22.61, and Pershing Square on the year has a gain of 3.27. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.